Okay, so welcome to section 2 of the Day Trading with Volume Profile and Order Flow course. So in this section, we're going to talk about what is considered day trading, which is going to be the focus of our strategies for this course of just taking short-term trades. So day trading usually refers to the practice of buying and selling a financial instrument within a single trading day. So basically, you end the day flat when the market's closed. As opposed to, say, swing trading, which usually consists of holding positions open for a few days or weeks, or long-term investing, where you hold positions for weeks or months or even years. So day traders will usually use high amounts of leverage and short-term trading strategies to capitalize on small price movements that occur in ideally highly liquid markets. There are many different strategies that fall under the day trading title, such as scalping, which is traders that open and close lots of trades during the day, just capturing a few ticks at a time. And those, they usually try to use a pretty high hit consistency system because, again, they're only expecting to capture very short movements many times. There's news trading where people, they'll wait for some kind of press conference from the Fed or central banks, etc., and then just try to capitalize on the volatility that's going to follow these announcements. There's high frequency trading, which is just the trading algorithms that do very fast trades, as the name implies, just in and out, capturing little movements, etc. So there are many markets that can be used for day trading, such as stocks, ETFs, futures, forex, options, crypto, etc. Some will have more advantages than others, as we will discuss later on in the course. So I made a list here of advantages and disadvantages that I think apply to day trading and from my own experience. So first advantage I see, no overnight risk of holding positions open. So if you're familiar with markets, that have a set open and close, such as stocks, futures, etc., you will see that sometimes there are unprecedented events or just news or different things that can happen during the nighttime or just hours when the markets are closed. In the case of futures, it will be during the break, the 1 hour break they have, etc. But basically, there's always a risk that if you hold a position open, there could be some event that happens which could negatively affect how price opens. It can either gap up or down, and depending what side of the position you're holding, you can immediately be heavily underwater or negative, or you can even have your stop loss hit instantly or even skipped in one of these case events if you have a sudden open or close, at a very, if there's a big discrepancy between the close of one day or week and the open of the next. So I feel like it's a lot safer when you do day trading, in the sense that you open your computer, you load up your platform, and you don't have any positions going. And at the end of the day, before you close your platform, you're flat, you don't have anything open, you have no exposure, so you don't have to worry about any unprecedented events that could affect your position if you're holding it during the closing and the opening of that market. Another advantage is you need less margin requirements. So later on, when we're going to talk about futures, I'm going to show you how, if you're focused merely on day trading, you're going to be required to have a lot less capital, and you're going to need to allocate less margin per contract as opposed to if you were just going to hold a position what's considered overnight or from one trading session to the next. So one trading day to the next, I mean. So that's another advantage in that it's more capital efficient to do day trading. Another advantage, you can have set schedules based on market hours. So as you know, some markets like crypto are 24/7. Forex is open 24 hours a day, 5 days a week. Futures, it's almost open. It's open almost 23 hours. But again, if you're basing your day trading just, for example, on US market hours, on the stock market hours from 9:30 a.m. to 4 p.m. Eastern, then it's nice to have that structure where you can say, okay, I'm going to trade during this certain period of the day where I know there's high volumes, etc. So it just makes for having a more structured trading routine if you're day trading and you know specifically what times you're going to be focused on trading, as opposed to, like, you know, if you're like swing trading for days, positions you're going to hold open for days, then you know you don't really have a set schedule specifically that you're probably going to be looking at it. Whereas with day trading, you're capturing small movements, so you just want to be paying attention at specific times. Another advantage, holding trades open for shorter periods of time. So I think this is also a big psychological thing, and I think for me, in my case, it has helped me a lot in that, you know, I used to get a lot of I used to stress out if I was holding like positions open overnight and stuff, because, you know, you're going to sleep, you're probably asleep for 8 hours, and, you know, a lot of things can happen during that time that you're asleep. So I feel like now it's better to just actively monitor and always keep an eye on what your trades are doing, as opposed to just, you know, taking a trade and just closing your computer and then just checking in. And that also leads exactly to that. Like, you're sort of stressing all day. Constantly you want to check your charts because you need to see how your position is doing, etc. So I feel like it's better, especially if you're using highly leveraged instruments, then you can definitely still make very good profits, even if you're just capturing small, quick movements. So that's the focus of this course and what I'm doing in my own strategy now. And the last advantage I have here on the list, it's you can potentially make higher profits with leverage trading. So if you're doing like futures, even some crypto instruments in futures, or forex futures, you know, well, even forex, you know, you can also do spot forex with high leverage, although I'm gonna talk about it later why that's not the best instrument to use for order flow. But, you know, leverage lets you multiply your profits. Basically, leverage means you're doing trading with margin. You don't have to put the total amount of the position you're taking. You're just putting in a small portion of the position. So you're basically being able to manage a large position with only a small percentage of that as collateral on your position. And now let's talk about the disadvantages of day trading. So one, it requires total concentration while doing it. So I say this could be a disadvantage in the sense that, you know, you can't really be like multitasking when you're day trading, because you really, you know, with the system and things that I'm going to show you, you're trying to just capture very quick divergences, very quick signals where you see that momentum is shifting or it's accelerating. So you cannot really be like multitasking, doing other things when you're day trading. You really just want to restrict yourself to just focusing on the platform and all the charts and information, and, you know, just paying attention to that at all times. Another disadvantage, depending on markets you trade, it may have a high balance requirement and restrictions. So this is especially applicable to day trading stocks, which, if you're familiar with the pattern day trade rule, basically the stocks, if you want to trade stocks and go long and short and actively open and close stock positions, there's a limit to how many you can before you violate that rule, and you're required to have a pretty high balance in your account. So that's one thing that's sort of a barrier, an entry barrier for a lot of people if they want to be very active trading individual stocks. And that's also why I'm going to talk later why I think futures market is a really, really good choice, because you get leverage trading, but you get a lot of flexibility. And now, especially with the micro contracts, you don't really need very large balance requirements. Another disadvantage, some markets are not regulated, they're manipulated, and they have low volumes. So this is especially applicable to Forex and crypto. These are markets that are not very regulated. You got to be very careful. You got to make sure you're dealing with a reputable broker. You always hear a lot of times about, crypto exchanges that get hacked, etc. So that's why I feel like you definitely want to focus on large regulated markets, especially that are traded on a central main exchange. So for example, futures with the CME is a good example. And also you want to make sure you choose instruments with high volumes, because if you choose, like, even in futures, there's some instruments that are low volume, or if you choose some unknown altcoin or some penny stock, etc., if there's not a lot of liquidity, if there's not a lot of volume activity, it can be very volatile. It can whipsaw a lot, and it can just cause you to have big losses or just get stopped out of all your positions. Another disadvantage with day trading is it may cause over trading. So again, this is a psychological aspect where when you're day trading, since you're taking quicker, shorter trades, some people think they need to just constantly open and close trades just to take advantage of the small price movements that they're trying to capture. But again, that's not the way to go about it. You definitely want to be very patient and just take the best and most clear setups when all the conditions, line up for a signal to open a trade. And the last disadvantage, again, the opposite of the advantage, but if you're using highly leveraged instruments, obviously you can amplify your losses. Even if it's a small movement against you, it can become a pretty large loss. So that's why also you need to always be paying attention, concentration, and be ready to just get out of any position if it starts giving you, any red flags. Now, one question that I know a lot of people are going to have is, can these concepts that we're going to go over in this course work for swing trading? And definitely, if you're familiar with the first complete trading course that I offered, which is Trading Price Action and Volume Profile, which again, that course is definitely geared more towards beginners. I go from the very basics of technical analysis to the principles of volume profile, and it's a really great course to catch you up to speed on all these concepts if you're a very beginner or even intermediate. This course is going to be focused more on the intermediate to advanced trader, as we're not really going to go into like very basics of like how to read candlesticks and what type of charts there are, etc. But I spoke about on that course about intraday trading as well as swing trading. Volume profile can work really well for swing trading if you use it on higher time frame charts. So even in markets that don't have real set volumes, that are decentralized like Forex and crypto, the volume profile tool is really valuable for the ease in which it lets you process the information on the charts and find important areas of support and resistance. So in this course, the concepts I will look into later on regarding advanced order flow tools are more focused on the intraday traders. Hence why I decided to make this course specifically focus on that. But rest assured, again, if you're taking this course and want to do swing trading in any market like futures, forex, crypto, CFDs, you can apply everything we're going to learn here and just use it on a higher time frame. So, instead of looking for trades on a 5 or a 3 minute chart, you can be looking at a 1 hour chart and plot your volume profile there, etc. And you can get into positions that you can have open for, more than one day. So yeah, instead of focusing, for example, on using an intraday volume profile, you can use a fixed range over the course of many weeks or months of action. And I'm going to go over this because, like I said, on the strategy section, I'm going to go over how I use higher time frame charts to help me find important levels. So the same concept here, you can use those levels just to do more swing trading if you want, instead of just zooming in and executing on lower time frames. And just find actionable levels to swing trade using trend, market structure, patterns, and everything that we have learned. So again, even though the focus is intraday trading, you can definitely apply all these concepts to higher time frame charts and use them for swing trading as well. Okay, so that's pretty much it for this section on what is day trading. And next section, we're going to start talking more about volumes, getting more into the meat of things related to order flow and the volume profile. Okay, I'll see you in the next one.